Hello friends, this is Raj Sastry from Raj Option Trading. Today is April 25th, 2022. Let's take a look at the market. Market is very volatile. We got to be very careful. Hope you're all doing okay. Let's take a look at how to invest during high inflation environment. We'll look at what asset classes do well during inflation. Also look at what sectors do well and what we can buy during this environment. So with that, let's jump in. Look, we got Dow Jones Industrial Average and major indices here. Look at the drop here. We got huge couple days here. Look, we got Thursday, big drop. Friday, huge drop. And we got today, market is opening to be a down day today, 193 points down in Dow Jones Industrial Average. It was much lower earlier. And same story, look, S&P 503 big down candles here. Friday, Thursday, big down. Friday, huge down here. And today we are pointing to a down day in S&P 500. Also, it's getting slightly better from what it was a little bit before. And same story in NASDAQ. Look, NASDAQ is trying to retest the lows here from earlier. Look, it's also a big ugly market here, and Russell 2000 is also trying to retest the lows, and it's also look huge down candles here. Gold, as we have high interest rate, dollar is getting strengthened. Gold is also dropping here, which is a commodity. Gold is coming down mainly because dollar is getting strengthened. And look, crude oil, after jumping high, it's also trying to come down here because it's also dominated in the currency US dollar. That's why as US dollar gets strengthened, even crude oil is getting hammered here. And look, bond is completely getting sold off here. Look, huge downtick here. It's getting stabilized right now. And treasury, interest rates are going higher. Look at this here. As Fed is trying to raise the interest rate, we should see the interest rate going further high. So in a nutshell, what's going on is market is really bracing for the rate hike, and there may be a 50 basis point rate hike. Market is really preparing itself for it. That's what is going on here. So with that, let's jump in and look at what we learned from the previous rate hikes. Look, we got a couple of rate hikes in the past here, and let's start from 2000s, back in 2000 here. Look, we got 2000 right here. We have rate hikes. Look here, we got two rate hikes, 25 basis points in February and March, and later in May, a 50 basis point rate hike. Market came down big time here during 2000. As many of you might recall, it's a dot-com bubble, and Fed was determined to tame it down. That's why they finally increased by 50 basis point. Market fell off the cliff. Look, finally what happened here, we got back in 2000, SPY, S&P 500 came down by 10.2%, and look, NASDAQ came down by 36.1%. That's a huge drop, as you can see here. And now we got 2018 here. Look, we got 2018 right here. 2018 was also big rate increase. Look at the rate increase here. We got 4 increases right here in 2018, and Fed was using some very harsh language, saying they're going to overshoot and even increase further. Market came down. Look, S&P 500 down 6.2%, and QQQ managed to come down slightly, just 1% down. Now we are in 2022. Look, we are in 2022 right now, and look what's going on here. We got 1 basis point, a 25 basis point rate hike already announced, and another 50 basis point rate hike in the cards. So let me also just quickly change this. This is 2022. All right, so 2022. So as you can see here, we got a 50 basis point hike in the cards at this time. So that's why we got to be careful. We are right here right now. So I could kind of see us going towards back in 2000. We might do something like this in our reality, because we are already past the correction that happened back in 2018. We are going further down. So you could prepare ourselves for something like 2000 here, where S&P 500 will come down. Maybe it will come down even further, maybe 15% down in 2022, and Nasdaq, from 18% you can go to maybe 25% or so. That's how I think market will pan out in 2022. Correction is going to be more severe than 2018, but it will be at least in Nasdaq it will go up to maybe 25% or 30%, whereas S&P 500 we can go down maybe 15% or so. That's how I kind of think at this time. Still a lot of uncertainties, but we got to be careful here and go from there. All right, so let's jump in here and see what environments will do well during high inflation. Look, typically we have safe haven like gold, silver, copper, steel, energy. They seem to do well, especially now energy is falling off the cliff, mainly because interest rates are going higher and dollar is getting strengthened. We got to be a little bit careful about energy, but typically some of the commodities will do well. But this time it's a double whammy because dollar is getting strengthened big time. We got to be a little bit careful here. But generally, these sectors will do well. And real estate and REITs typically do well during high inflation environment. We got consumer staples. Think about Procter and Gamble, and some of these consumer staples will do well during high inflation environment. People will cut back on the consumer discretionary, but they got to buy their Dove soap and their shampoos. So that's why consumer staples will do well. Healthcare will typically do well. Historically, healthcare sector done very well during high inflation. So you could buy some great stocks like United Health and Eli Lilly, J&J, and so on and so forth, even AbbVie, and they will all do very well. And then we got your utilities. Utilities will do well. You got to buy your electricity and your gas and so on and so forth. Utilities will do very well. They will hold up pretty okay during the high inflation. And then you got some of these things like fine art, vintage, short-term bonds, some selected stock. They also tend to do well. On the downside here, industrials, as you can see here, down because of shortage and labor issues and so on and so forth. And growth stocks with a high debt load, watch out. You got to be avoiding them. And also don't go after stocks with no profit and high debt load and no positive cash flow. Avoid such names here. You are better off with better names here. And stocks with no pricing power, they will go down here because it's all a commodity and there is no pricing power. There is no intellectual property. That's why I avoid the stocks with no pricing power. So all right, so now let's jump in and look at the performance so far. Look, performance so far here, we got 2022 right now. In 2022, as you can see here, we got major ETFs here. S&P 500 down 10% and QQQ down 18%, which is tech-heavy. Nasdaq, Dow Jones also down, which is not too bad. And IWM small caps have come down pretty significantly, 13% down. And you got technology down 17%. And look at the semiconductors. Semiconductors got crushed here, 24% down year to date. That's a huge drop here. Industrials down. Healthcare is down, but not too much. And look here, we got, this is consumer, XLY is consumer discretionary here. Industrials also down, but not too much. Financials are holding up pretty okay so far. On the positive side, look, we got utilities doing well. Gold is doing well. Consumer staples are doing very well. Energy is flying off the cliff. Now it's cooling off slightly. And real estate is doing okay. So in a nutshell, as you can see here, so far in 2022, you got to be selective here and go after some candidates like we got here XLU doing well, gold doing well, consumer staples and XLE doing well here. On the other hand, if you look at some of these areas like SPY, QQQ, and even SMH, you can be selective. And during the huge big down days like one we had on Friday, buy some profitable stocks that will do very well. And you could also buy some ETFs like SPY, QQQ, and even ETFs like XLV, they will hold up pretty well on the big down days. Don't be afraid, jump in, buy some of your favorite stocks and ETFs, especially profitable stocks, slowly but consistently. And look, we got 2021. 2021 was a banner year, as you can see here. All the sectors, with the exception of gold, did very well. 2020, COVID-19, it also had a nice turnaround, as you can see here. Energy came down big time. Look at the energy. Energy came down 32% during COVID-19. Nobody wanted to drive. That's why energy bounced back big time in 2021 and 2022. And then you got 2018. This is a huge interest rate hike, and Jerome Powell used some aggressive language. Look what happened here. We got SPY QQQ down here, and look, IWM small cap took on its chin and came down big time here, and industrials big time down here, and financials also down. Energy came down, so energy was down during 2018 here. And then going back all the way to high inflation environment back in 2000. Look what happened in 2000. It was a bubble, something like what we have today, but it's only higher bubble back in those days. It's a dot-com bubble. And look what happened here. Bubble collapsed. SPY down 10%, Nasdaq down 36%. And look here, we got XLK, which is all technology, down 42%. Severe correction in technology. And we got industrials and consumer discretionary and industrials down big time. Healthcare big down. Industrial did very well back then because people went away from these bubbles into these stable industrials, as you can see here. And we got consumer staples did very well. Looks like consumer staples and XLU, which is utilities, they are pretty much safe haven, as you can see here. And energy went well during those days because people wanted to drive. There is no COVID or there is no restriction back in those days, so that did very well. So in a nutshell, as you can see here, look, we got XLU. That seems to be pretty good here, mostly nice and high. XLU is a good one here, and GLD is a good one. It's a pretty much safe haven. And we've got XLP here. XLP is doing very well now, and even during high inflation environment, it did very well back in 2000. And in 2018, as you can see right here, 2018, it did pretty okay, not too bad here. So that's why these areas like gold, like consumer staple, and even healthcare for that matter, you could invest slowly into the during the high inflation. Especially look for some down days and buy. Otherwise, we don't want to chase. But as usual, buy your favorite ETFs like SPY, QQQ on the huge big down days. Even IWM, SMH, they will all work by during the huge down days. Don't be afraid. That's the best way to invest. All right, now let's look at what's going on here and jump into a little more detail. What sectors did well during 2018 rate hike? Let's quickly take a look at those. Starting here, we got SPY. Look, S&P 500 so far it's down 12%. That's a huge correction in a huge index like SPY. And SPY is pretty much not doing great in the whole this year. Look, January, they're down. February down, March they're down this year. March is up, but April is down. Overall, we are down 12% year to date in huge index like ETF like SPY. And then we got here other of 2021. As you can see here, in 2021 we are up nicely. Look, nice performance in SPY in 2021. 2020 was also great here. We got some issues. Look, back in March it came down big time. And then you got 2019 and 2018. Look, 2018 was the huge rate hike and inflation worries. Look here, we got December 2019, 2018 here, 10% drop. drop. I remember these days here, it looked like every day SPY and market is crashing, and we are doing something like that right now in April here. We are almost reaching to high 6% here. So right now we are in a time where market wants to go down, something similar to December of 2018, where all the indices started crashing. So I think maybe wait slightly little more, it might come down and match 2018 December here, and then we can slowly but surely it'll drop off slightly, and then we'll have some increase as we go forward. Look, after this huge drop in 2018, both December in December 2019 January, as you can see here, it started going higher. So that's why it's always as we say, there is light at the end of the tunnel. When you see huge drop like this, don't be afraid, buy slowly, and there'll be better days ahead. So all right, so let's look at QQQ here. Look, QQQ is already in a big correction territory so far in 2022. Look, 23% down in 2022 so far, and just in April down 11%, and in January down 10%. It's a bloodbath in QQQ here. High growth names are going out of style, as you can see here. And as you see here, it's something similar to what happened in 2018. Look, 2018 December here, 10% drop, as you can see here. And we are something similar, a little more severe than back in 2018 here. I expect the trend to continue a little longer here, because Fed is not our friend. If Fed increases by 50 basis points and use some harsh language, there will be more corrections coming up in May. Watch out. So I think it'll get a little more worse before it gets better. All right, now we got IWM small cap, as many of you know here. Look, it's also in a big correction territory, 16% down year to date. Just in April, look, 7% down. And in January, they were, it's 11% down. And look, 2018 here, 2018 also big time down in IWM, small cap here. And right now, in December, it's down 13%. I think we can expect us, to also reach 13% or even a little higher. So that's why you got to be careful. Small cap, they don't have as much money, and it's a little more volatile than large caps. That's why, these small caps will take down the chin as the market, as the rate hike looms. That's why you got to be careful with the small cap names, especially small cap names that are not making money. You got to be very, very careful. There will be a little more correction in those, as you can see here, back from 2018. All right, now let's look at DIA. DIA is Dow Jones 30, as you can see here, so far down 16%. And look, 2018 was down 13%. 2018, just in December, we are down 13. As you see here, we are at 7% so far in April. I can expect this to go higher. There could be some tough days, in say May, June time frame. That's why there will be some more dark days before it gets better. So be careful here also. And now we got XLV here. XLV is a little bit different story here. XLV, we are down. It's a healthcare, as many of you know here, just 4% down. And look, 2018 healthcare went up finally, even though they're up big time in 2018 December, but they managed to go higher for on a yearly basis. Right now, look, we are down 3%. We can go further down in healthcare. I say, if healthcare goes further down and matches December of 2018, buy some great stocks. Buy stocks like Eli Lilly, AbbVie, and even Intuitive Surgical, and say Regeneron. Buy some of those great healthcare names here. As they drop, they will come back with vengeance, and you will do very well. All right, so now let's look at a couple more sectors here. We got energy. Look, energy was a huge bad year back in 2018. Energy was down 21%. Mainly because at the time, there was a shale boom in US. Everybody were drilling, and there is no pricing power. Right now, it's a different story here. Folks are a little more disciplined. They're not drilling as much as 2018 here. So look here, we got so far in April, energy is down 1.13%, and look in December of 2018, energy is down big time, and I don't expect energy to go too much down, mainly because there is a scarcity. Russian oil is not going into all the places. There is some restriction. That's why energy can hold up as we go forward. So that's why energy will be a little more stable. I would say, buy energy on the down days and go from there. It's a little more stable right now, given the geopolitical tensions. All right, now let's look at a few more here. Look, semiconductors, SMH, look, we are down 34% year to date. Think about your favorite stocks like Nvidia, AMD, all big down big time here. Just in April, we got April 2022, we got semiconductor down 13%. And look, we got in December of 2018, semiconductor were down 11%. And October, it's down 12%. It was a bloodbath back in those days also. I can expect semiconductors to go further more down here, maybe say a 5 to 10% more down. Then it will start stabilizing. So be careful in semiconductor names. There are a lot of high valuation stocks like Nvidia, still high valuation. That's why that's coming down. So you got to be careful. I love them. I buy them on these triple digit down days slowly and accumulate. All right, now we got here gold. Gold is in a different story here. Gold has managed 6.63% gain in 2022, and look, it's doing pretty well so far. So gold is getting a little bit weak these days because US dollar is getting strengthened. As gold gets hammered, I would buy some gold here. It's a good hedge play. And look, in 2018, gold came down not too much, just 3% for the year, but it's a nice safe haven and a good hedge here. They may not do great, but it's a good hedging strategy here to buy some gold when it's down. Commodities will get a little bit hammered when the US dollar gets stronger. All right, now let's look at XLI Industrials. Look, industrials so far it's down 6%, much better than the technology stocks and a couple other sectors. And look, back in 2018 it was down 15%, and look, just in December it went down 12%. So I can expect even industrial to go down a little bit lower here, but it'll be much better than technology and high growth type names here. Typically they got a little bit lower valuation, so there will be a little more down days in XLI here, industrials, but they will hold up pretty okay here. But look, after 2018 they came back with vengeance back in 2019, so that's why it's good to buy some great industrials as they drop off. Think about Caterpillar, think about John Deere, DE, and other names like Danaher and so on and so forth. They will all do well. All right, now let's look at a few more here. Let's look at XLU, utilities. Look, utilities are doing well so far, up 4.55% for the year. And look, it's managed to do pretty okay here. Down, but pretty okay so far. 2018, look, it managed to go higher for the year. So that's why there could be some down days in utilities, but they will do pretty well compared to other sectors. All right, now let's look at IYR real estate. These are mainly the REITs, as many of you know. Look, REITs are down 5.20% so far, but much better compared to other names here. 2018, it's down 7.02%, and just in December of 2018, it came tumbling down. So there will be some more down days for IYR here, but it's a great buy. It will hold up pretty well during the inflation. All right, now let's see how to invest during high inflation environment. So I suggest if you're using margin, please get out of the margin, because as stock market comes down, your margin will impact you and you'll get broker calls to liquidate, but it's not a pretty scenario. And if you need money for next 6 months to 1 year, sell some shares, especially during these days. There will be some bear market rally. You could take some profit off the table or take some money off the table. And yeah, you do some hedging here when gold and bond, especially TLT as example, and interest rates, you could go after some of those here. Bond, you got to be a little bit careful, it's getting sold off here. But gold, utilities, and even short-term interest rates, they're good to buy and hedge. And utilities, healthcare, consumer staple, they will fare better. So when there is some down day here, go after and buy some utilities, healthcare, consumer staples. And one of the great strategies to buy profitable stocks and even big ETFs, stocks with low valuation, good cash on balance sheet, positive cash flow, and low debt. Buy them on a sale, buy them on huge down days like the one we had on Friday. You'll do well. And companies with pricing power will do well. Think about Apple, Costco, UNH, even Amazon.com. They will all do better. Eventually they might go down, but they will do better. And finally, sell into bear market rallies. There will be few bear market rallies on your way. You feel like, hey, we're out of the woods, but it will come crashing down again. Take some profit off the table when there is a few rallies here and there. It's always a good strategy to have some money to play again. All right. So with that, thank you very much. Happy investing and trading. Please subscribe.